You know, it's interesting. If they were going to get ready for a drop in price, do you think they'd start adding to their shorts? Yeah, I think so. How's it going, fellow traders? Magic Trader here. Welcome back, and here we're going to go through the latest set of data that was recorded on August 19, 2025. We just got the data this past Friday, the 22nd, but this data was recorded on the Tuesday, and this is the positioning of the big institutions. And as you know, we typically like to look at the change column, take a look at what the banks have been doing with their positions over the last week. It gives us a good insight as to what they've been doing recently, but obviously if you want a better look at what the banks are doing, we got to look at multiple weeks data in a row and combine it with the supply and demand that is playing out. So when we look at the chart, the first thing we can look at is some of the bigger numbers that we see, like here, positive 28, that's for the pound US dollar. We see a negative 29,000, that's for gold. We see a positive 40,000, that's for the S&P 500. And bonds, a little bit bullish there, but not anything crazy, okay? So that's what we see when we first examine the data. Now, let's dive in a little bit deeper and see what's going on here. Here's gold. And so what do we see when we look at gold? Well, first things first, we can see that back in February, April, the positions of the institutions were very aggressive, just like they have been over the last few weeks. Now, remember, we've been talking about how the banks have been accumulating a massive position on longs. First, they did it here, and just recently, they started doing it again. But you can see this time, as they've been adding to their longs, it didn't really drive price really aggressively to the upside. It's actually just sitting in this range. And it's a very interesting range indeed. Okay, we talked about the price action on the multiple time frames with members. We talked about the sequence that was playing out and how there's a lack of strong buying taking place here on gold. So that leads us to suspect that over time we are going to see a push to the downside. Now, what is required for price to drop to the downside? Well, I think first of all, when the banks start taking massive profits on their positions on their euro US dollar longs, I think that's going to help fuel a move to the downside, because dollar will be rallying at that point, and then we'll see this one tip over and make a move to the downside. So right now, yes, they've been reducing from 311 down to 275, but there hasn't been anything very significant in terms of movement. As for oil, take a look. Oil. Short positions increasing. Remember July 8th and then July 15 came, all of a sudden, boom, 120, 23, 146. Look where we're at right now. This has been a steady increase in their short positions, okay? And what have we been seeing? We've been talking about what price was reacting from on the monthly time frame. We had monthly supply come into play here. We had a big spike up, but that was only temporarily. Retail traders were caught going long. And I said, watch for price to come down and see what happens if it closes in that supply. Because if it does, we are likely going to see a move to the downside. And that is what took place. The supply came into play on the monthly time frame, and so price has been moving to the downside. Now, as it's been moving to the downside, look what took place. Look at this. Down, 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 and it came and contacted institutional demand. That's an institutional demand zone that you're seeing right now, down here on the weekly time frame. That is institutional demand. It's coming into play, and this is why we're seeing this bullish pressure over the last week. Okay, so but you know, positions are telling us that shorts are the way to go. That is what the banks are focusing on. But I would want to see that demand zone be removed first if I was personally going to get into a short position. So I'm going to be watching that to see how that unfolds. US dollar. Boy, oh boy, did you see that nice drop that we got? Well, you know, you follow the news and you'll hear Powell was opening up the door for a potential cut in rates in September, right? And so what happened? Price dropped. Well, listen, first of all, the banks have been focusing on short positions for quite some time, all right? But we did contact an institutional area of demand back here. And so we were expecting a push to the upside, which we got. Look at the bullish pressure here, okay? Now we're coming into this basin candle with the big push to the downside. So there's selling taking place here, okay? We located it on the daily time frame. We contacted it twice, and price is now dropping from that selling area. So all I'm seeing here is price is just responding to institutional selling, which is causing price to make a move to the downside. If we look at the RSI, we can see that RSI has been weak all throughout this contact of the demand zone. So if we're going to be getting a bigger push to the upside, I would expect there to be some kind of a move down and then eventually a bigger move to the upside. I think that's in the works. At least that's what the evidence is suggesting. So we're going to continue to follow the positions and see if it follows along, because right now we look at long positions are very cooled off. That's why they're blue. So we're going to watch to see if they eventually start coming out of blue territory and coming more into green territory, showing that they're actually being accumulated. Okay, so we'll wait and see as that plays out. Or not green territory, red territory, I should say, meaning that they're becoming more aggressive. Okay, so we'll see how that plays out, and we'll move along over to the Aussie. Look what's happening here. Aussie, look at the longs. Okay, very cooled off. They've been cooled off with longs for quite some time. Now, I told you, they're going to use short positions in order to manipulate price. Look at short positions, okay? See what's going on here? 107, 113, now 126,000. What is all-time maximum size on short positions? 145. You know what's going to happen? Major, acquiring of short positions, and yet price is just sitting to the sideways here. Not making any significant move to the upside or downside, just ranging to the side. So typically when short positions are added, it causes price to drop. When they're closed, it causes price to rally. Okay, just like here. They're added, causes price to drop, and then when they're closed off, price typically rallies to the upside. So interesting one. I have a bearish bias on this one only because supply is in play, but we'll have to wait and see because, they're really aggressive with their shorts. We'll have to see what happens when they start closing them off. All right, USCAD, take a look. Look at the long column, pretty aggressive, and it has been for quite some time, right? Remember when we were super aggressive, I said they're going to take profits on their positions, and that was going to fuel a move to the downside. You remember that? That was up here. And look, it did fuel a move to the downside, okay? Look at shorts. Have they been focusing on shorts all this time? No. Look at the shorts here, okay? The shorts have been very cooled off, okay? So this push to the downside in price wasn't caused by them adding short positions. It was caused by them closing off long positions, right? So what am I expecting? Well, potential move to the upside only because that's what the other dollar pairs are telling me. Not because there's any demand, because if we look to the left, there is no demand here, okay? There's an imbalance, but no institutional buying. Let's move along. Let's look. U.S. Swiss. Here's institutional buying right here. Here's institutional buying right here. Look at the long column. That's the one where the banks are focusing on. Can you see how it's all red? Because they've been focusing on it. But look at the short column. What color do you see here? Blue. Okay, neutral, cooled off. They're not even focusing on shorts at this time. So this leads me to suspect that over time we're going to get a move to the downside. But the one thing I will point out, take a look at the weekly chart. And if you look at the weekly chart, you'll see that when price was dipping into this demand, RSI was very weak. You see it creeping into bullish territory slowly, right here at 40, okay? And then we're going to get a dip. What could happen is another dip and then explosive move, okay? Like that. Right, so I'm watching for that. I'm preparing for that. I think that is likely in the works, but I'm going to continue to monitor the positions and the charts to see if that is indeed going to play out. All right, Euro US dollar. look at the long column, okay? Very, very aggressive. 252, all-time maximum size is 266. What do you think is going to happen when they reach that maximum size? What typically happens? They take profits. You know what take profits does? Fuels a move to the downside. You know what's interesting? If they were going to get ready for a drop in price, do you think they'd start adding to their shorts? Yeah, I think so. That's exactly what they're doing. So this looks pretty interesting, okay? Looks pretty interesting. I'm already positioned for a move to the downside. We had a short signal, 3-to-1 move for a short signal on the risk to riches challenge, which played out to perfection. I gave that trade to members before it played out. And so now we're going to be waiting for some new signals. Pound US dollar. Same thing. I suspect that price is going to drop only because of what we're seeing with the euro US dollar. And take a look. They're acquiring a short. They're offloading along. Well, last couple of weeks they've been adding, but overall they've been reducing long exposure and increasing shorts. So this leads me to suspect that over time we're going to get a move to the downside. So I'm going to be paying attention to the charts and looking for short signals as we move forward. US dollar, Japanese yen, super aggressive with shorts. I told you they were going to start taking profits, and they have. 204 down to 168. That's pretty aggressive. And look at longs. Do you think longs are telling us something? Yeah, I think so. Long positions, okay. Very cooled off territory to now kind of aggressive. If you look over the last couple weeks, an aggressive position. That's why I'm tracking it here on the charts, right here. I suspect over time we might be seeing a bigger move to the upside. And last but not least, Kiwi dollar, not much taking place here. Same thing that's going to happen with the Aussie. I told you this one follows Aussie all the time, and no supply and demand. We got demand coming into play here, but above here there's no supply. A demand here, so we got the rally. Remember when we were super aggressive with shorts back here? I said they were going to take profits and it was going to fuel a move to the upside. That's exactly what took place. All right, so now we're just waiting to see what it wants to do going forward, because it could pretty much do anything. All right, folks, and there you have it. There is your CFTC data analyzed for you. And if you want to join us and you want to learn how we do this, you should. 7 days for free, whiteoakfx.com. Join us for the Risk to Riches Challenge, where I'm going to take $1,700 and potentially bring it up to over 10 Gs in 10 trades. I'm documenting every single trade, giving it to you before price plays out. We've done 2 successful trades so far, looking for my 3rd one. So come and join us and see what you can do with your accounts. Anyways, you take care. Trade on your own risk. Always, always, always. All right? Anyways, nice to have you. You take care. Enjoy the rest of your week. And so long.